Hello, TheoTraders. This is Don Kaufman. Here we are. It is April 13th, 2016. The S&P is once again up 20 in today's trading action. We are just a short time after the close, and I say once again because that is, ladies and gentlemen, 2 days in a row, the S&P is exploding to the upside. However, one thing to kind of keep in mind over here, in intraday trade, very unusual. And I've looked for this time and again as a signal like what's ultimately changing in here. How often do you see, again, S&P's up big, okay? Volatility down, but not down substantially. Bonds actually ended up rallying today up some 21 ticks. So right there, again, we're getting ultimately contrarian kind of indications. S&P's up, bonds up. This is kind of what we call that like risk on, risk off. And right now, the markets appear to be showing what's displayed as what we call risk on. That means take your capital and shove it back towards the S&P 500. The only thing unusual is when you get risk on, you're typically getting the bonds selling off. You're just not getting it out there. So to continue on over here, oil also down on the trading day. So there's an oil inventory report. And I have to say, oil today was it was Mr. Toad's wild ride inside of oil. The inventory report kind of came out middle of the day. This is intraday traders, either nightmare or absolute delight. But oil being the product that was driving a huge amount of energy stocks, obviously energy. Energy though, so oil down 1.5%. The energy sector, though, fared much better, up about 0.5%. It didn't matter what occurred today. Bonds up, oil down, S&Ps continued to rally, led by none other than the XLF. The XLF having a staggering upside day over here. Now, again, this is one that I've been trading for, since the late 90s. We're 18 years in. Very unusual to see financials not only strong but explosive out of the gate over here, up again over 2% with the bonds up. What's ultimately driving the financials? JP Morgan. JP Morgan had earnings this morning. Stocks up big, okay, throughout the course of the day. In fact, most of your financials, and you'll see them on my screen over here. Yeah, I've got Bank of America on the screen. What is it? Yeah, that's up like 4%. It didn't have earnings today. No, its earnings are actually coming. JP Morgan, though, up 4%. Citi, almost a 6% gain. Disgusting moves inside of the financials over here. Okay, all to do with the fact that JP Morgan beat their lowered expectations. I say that because for the past 3 weeks, we've heard nothing about earnings are not going to be that good. We're very concerned about earnings. Most of these firms have been guiding lower, and all of a sudden, boom, we beat the lowered expectations. Hallelujah. It's amazing. Other things looking at it today, just a quick recap over here. Facebook, another one. Facebook came out today and said, things maybe are not as good as we thought, but not half bad after all. That's real. Okay, so I traded a lot today on an intraday basis. One of the underlyings I traded, and I got to tell you, Facebook, it was a little wild in there today. And when I say I traded a lot, all kinds of trades. I'm kind of scrolling through on the bottom of the screen many of the stuff that I did trade throughout the course of the day. So again, firing off trades. Facebook happened to be one of the trades that I had on. And this position, I was lucky to get out alive. I made like $139 on Facebook. Oof, got out alive on Facebook. Another thing I traded today, the bonds. Looked like the bonds were to explode. On an intraday basis, they did take off to the upside. Not a half bad like P&L inside of the bond market. Last, but definitely not least, yeah, I jumped on the oil bandwagon. Okay, oil. Oh, this contract, again, scares me to death over there. I traded a whopping one contract, came out ahead over there, and you need it. Okay, so not everybody listening to this necessarily trades on an intraday basis. But for somebody like me right now, I need to do it. I trade on an intraday basis. I trade mid-duration. For those of you that like the idea of swing trading, of course, I put positions on all the time for swing trades over there. One of the ones that we've got that's actually working out half decent today happens to be Home Depot. So we've got what we call like an in-out spread on Home Depot. It is in the money. Okay, we're just looking for opportunities ultimately to close out of the Home Depot position. It's in the money. Home Depot, it's one of the stocks that backed off. What else do we have over here? We actually have a position on Mickey D's. So every day in the chat room here at TheoTrade, obviously, we're placing trades live with clientele. If you can't join us during the trading day, you can check out. It's called the TheoTrade Tracker. It's right inside of our site. So all of the trades that I place, all the trades that Doc place, all the trades that Tony place, we're putting them, okay, in the trade tracker over here. The McDonald's trade, this one is right on the dance floor, still out of the money, but on the dance floor over here. It's another in-out spread. I've purchased the 125, 122 put spread over there. It's got 9 days left, but once again, it's one of the stocks that's down. Another trade, okay, that we've talked about pretty significantly right here during these evening videos. We looked at short the Qs and long the XLF. Now, the XLF, that thing is up over 2% today. The Qs, where is our lovely NASDAQ over there? It's up, but only about 1% today. That trade is coming to fruition. So, seems like, again, I may be a bit of a bear, but everything we're throwing here in the short duration, it's working for us. And that's one of the most important things that you can recognize as a trader, okay? My longer duration positions might not be spectacular on a day where the market rallied because I'm a long-term bear. Short duration positions, some of the swing trades out there, the in-out spreads, okay? We're killing it with a couple of the positions we've got on there. So, things to look for in the next couple of days, all right? Something that's very noticeable to me. The XLF maintains a much higher implied volatility in the short duration. Why? Because there's still many of the banks to come out. Okay. The next thing you want to look at, what is going on in the bond market? Bonds, again, they do not typically rally with the S&Ps going up. Okay. This comes to fruition, all right, by Friday of this week. Okay. The bonds, if they continue to rally, and I'm saying, you know, here we are on a Wednesday afternoon, those things continue to rally. On Thursday, rally into Friday morning, get short the S&Ps. It will take its toll on those S&Ps. It's, again, a very, very rare occurrence to see bonds up, XLF as strong as can be. I mean, this is the sector that led us, okay? So ultimately, if the bonds continue to grind higher, and that's exactly what they've done today, look specifically in the bonds in the neighborhood of about the 167 handle. Again, 167 handle would be an unbelievable breakout to the upside in bonds. That'll cause some pressure forth to the S&P. So I don't think in this case the trade is to buy the bonds. I don't think you buy the bonds. I don't think you buy the TLT. You get above 167 inside of the bonds with the TLT. Ultimately, you look to sell the market. And I say the market as a whole because, again, everything is moving in relative tandem out there. Thanks a lot, everybody, for joining us here at TheoTrade. This is Don Kaufman. Be back on later this week. Have a good trading day. Bye-bye.